Attractive yields and longer-term compounded growth rates within Europe's recovering property markets offer lucrative investment opportunities. As an approved regulated fund, the CHC Prime Property Fund 2 offers very favourable tax treatments to investors, as well as superior long-term growth opportunities. Europe's commercial property market is booming, owing to economic, structural and cultural drivers. As a result, there is an ever-increasing appetite for investment properties across the continent. The rental cycle has turned, and office markets have witnessed rental growth due to high levels of demand, while low interest rates and stronger occupier demand offer good investment opportunities with secure returns. Established in 1997, Custom House Capital has a proven track record in sourcing superior property investment opportunities in Ireland, the UK and continental Europe. To date, Custom House Capital has acquired and manages over 50 international commercial properties. Harry Cassidy, CEO at Custom House Capital, talks to John Mulholland about the benefits of the CHC Prime Property Fund 2.
Harry, before we begin to talk about the new fund, Property Fund 2, what exactly was the thinking behind the CHC Prime Property Fund number 1, and what exactly did you do there?
Well, the CHC Prime Property Fund 1 was set up to offer clients access to pan-European property that provided both geographic and sector diversification. We chose 2 office developments in Marseille, France, as we fundamentally believe that Marseille office market offers clients excellent potential and is still largely undersupplied. A retail development known as the Maximilian Centre was also chosen. As you know, that's located in Karlsruhe, Germany. It was recently opened and forms the centrepiece of the fund. 2 mixed-use commercial properties that were then added in Switzerland, and that they were really added to increase the yield in the portfolio.
The Custom House Capital Prime Property Fund number 2 has just been launched. What benefits exactly does that offer to investors?
Well, as with the CHC Prime Property Fund 1, it offers investors diversification and the same great range of benefits. Investors also have access to a large pan-European fund focused on 2 of Europe's largest investment property markets, France and Germany.
So, what exactly will this fund invest in?
Well, the fund will focus predominantly on prime commercial investment opportunities in the more mature markets of Western Europe. As we said, properties in France and Germany have already been identified. These include landmark developments in Paris and Marseille in France, and Landsberg near Munich in Germany. The Paris investment is the centrepiece of the fund and consists of 2 properties, Panorama Seine and Dockside.
Located along Quai de Stalingrad on the banks of the River Seine in Issy-les-Moulineaux, southwest of Paris's 15th arrondissement, Panorama Seine and Dockside provide over 10,000 square meters of high-spec office space with underground parking facilities. Both buildings are due to be completed by March 2008.
Now, I know you like Paris, capital city, but specifically, why did you choose to invest in these 2 particular properties?
Well, the 2 properties are located in Issy-les-Moulineaux, which is a strategic business location in Paris. There are a number of high-profile companies located there already, such as Coca-Cola, Hewlett-Packard and Cisco, and Microsoft will also relocate its European headquarters there. Panorama Seine and Dockside are 2 buildings, also benefit from 100% letting to Sodexo, our tenant, one of the world's leading providers of catering services, and they've signed a 12-year lease. This is highly unusual in France. Leases are typically 3, 6 and 9 years, and they will also relocate their global headquarters in there during 2008.
So that's Paris, capital city of France. Also, you have a big interest in Marseille, second largest city, 3 hours by TGV, birthplace of President Sarkozy. But tell me the financial reasons for investing in Marseille.
Well, obviously it's an important city, being the second largest in France, and we've chosen this site because it's close to the Euro-Mediterranean development, which is currently the largest urban and economic development project underway in Europe. This €3 billion project is set to become the business hub of Marseille, so we're very comfortable with the location and have already acquired 2 other office developments there.
The 31 Boulevard Charles Moretti is a 6,000 square metre site close to Marseille city centre and adjacent to the exciting Euro-Mediterranee project. Upon completion in 2009, it will provide a modern city office specification with distinctive architectural elements incorporating glass and concrete. The property will extend to more than 11,000 square metres over 5 floors, including 8,000 square metres of lettable office space and 171 underground car spaces. Cleverly designed, the property can be divided into multiple units if required.
Paris, Marseille, and of course for balance you have Germany. And you explained to me earlier that there's a shopping centre being developed near Munich. Why a shopping centre? Why Munich? Why Germany?
Yes, we are developing a shopping centre called In-Centre in Landsberg am Lech near Munich. In-Centre already benefits from 100% letting, even though it won't be complete until later this year. That's a major attraction. It's located in the state of Bavaria, which is one of Germany's wealthiest states, and it has a low supply of shopping centre space compared to the German average, despite the residents of Bavaria having an above average purchasing power. Therefore, In-Centre provides a great opportunity to our investors.
In-Centre is located in Landsberg am Lech, 45 kilometres from Munich in Germany. Due for completion in late 2008, the property will provide nearly 25,000 square metres of lettable retail space and 1,200 parking spaces. In-Centre is especially attractive as it is located in one of the wealthiest regions of Germany and already benefits from a full letting to a number of leading German retailers.
Now this is a big project, Harry. It's 250 million plus. How exactly will this be funded? How will it be financed between client equity, bank borrowings? What are the procedures?
Well, it is a large fund of approximately €250 million in size, so we'll be raising just over €62 million in equity. The fund will close on the 14th of March 2008. Investors can contact us directly or through their financial advisor. The minimum investment is €250,000.
What type of investors are you looking for? You're looking for individual investors and perhaps a range of pension funds?
Absolutely, it's open to all types of investments, private clients, pension funds, approved retirement funds and even company monies.
Very exciting, big project. Wish you well. Thank you very much.
John, you're very welcome.
Custom House Capital believes that the CHC Prime Property Fund 2 is unique to the Irish market and can potentially generate above-average returns from pan-European property. Reasons include the excellent track record of the investment manager in terms of choosing prime properties in markets with high growth potential, while the structure of the fund as a qualifying investment fund offers many advantages. Real estate markets are cyclical by their nature. For that reason, our strategy is to invest in multiple locations, thereby constructing a natural hedge for localized cycles in individual markets. Our aim is to complement our core philosophy of growing our clients' wealth in a risk-averse but intelligent and sophisticated manner.